This module is on self-employed borrowers. Also under the same classification, if you're a commissioned employee and you're a car salesman, something like this, and your pay is 25% or more commission pay, then you're gonna fall in the same category. So, in doing the self-employed borrowers, people get worked up in it and just say it's too difficult, and oftentimes they won't even take the time to go through and even trying to get pre-qual. But understand it's something that definitely can happen. There's just kind of another set of rules on that, and it's understandable. If you're self-employed, you're a little more in control of what the numbers are, so they're going to look at a few different things a few different ways. So one of the things I want to talk about is on your income. As a self-employed person, you're going through and maximizing your write-offs, right? It's one of the advantages of being self-employed. So you're maximizing your write-offs, minimizing your income to minimize your taxes. And in doing that, you're bringing down your income to save money on taxes, but that reduced income tells a lender that you don't have enough disposable income to make the payment or to qualify maybe at the house that you want to buy at that level. So it's important to watch those things. The taxes that are going to be requested are 2 years worth of taxes. On a case-by-case exception, you can do 1 year. If you've been in business for 5 years and you're asking for a 1 year exception to just show 1 year of taxes, that's probably not going to work. If you've been in business for a year and a half and you only have 1 full year of taxes, then something like that is going to work in terms of an exception better than just not wanting to show the other years. In showing 2 years of taxes for income, what a lender's going to do is they're going to take year A and year B, and they're going to blend them. They're going to take the average of those 2 years, and that's what they're going to base your income on. On depreciation 179 expenses, on those, when you're figuring your income, that was just a depreciation expense. It wasn't money that you actually spent or gave away. So with those, that's going to get added back into your income. So 179 expense is a great way to be able to minimize your taxes, but still maximize your income when it comes to lending, right? Because you can take this 179 expense and you can add it back on top of your taxable income, and a lender's going to look at that whole thing as that's your income. So know that those do get added back in. In regards to a self-employed that just started their business, a lot of times they think, well, I don't have 2 years worth of taxes, I can't do it, I can't get a loan. Something that most people don't realize is there's exceptions to every rule. And in the lending industry, you can sometimes take years of experience and use the years of experience along with showing 2-3 years of taxes and say every year I'm making more money. This year I happen to be self-employed, but I can show you all these years of taxes. I'm always making more money, and now I'm self-employed, and I'm not going to do it to make less money. That's one of the points where you get in and you start to have an exception. So you could have years of experience working for somebody else as a W-2 employee and then move on and start your own business. It's common, it happens all the time. Those are things that loopholes, if you will, to be able to get in and have an underwriter look at the big picture and understand, yes, he is making money. So don't be discouraged by not trying to get pre-approved just because you have a new business. The other thing that you can look at is one-time business expenses. And starting a business or maybe even starting a particular job, you might have an expense that you incur. In becoming a truck driver, you go to truck driving school and you have to buy the boots and things like this for safety, maybe a helmet. Those things are one-time expenses. You're going to take those as a loss on a tax year, right? And when you're showing the taxes, in order to increase your income, you can say, well, yeah, I had $5,000 of write-offs on that, but those were one-time expenses because I went to the schools, because I had to buy this, this, and this to start my business, and I won't incur those every year. So In doing that, you're taking that $5,000 and you're adding it back into your income. So there's all sorts of little things that you can do. I'm trying to give you some tips on this so that you understand that there's ways to make it happen. As long as you have the right person helping you, it can get done. So be encouraged by these things that I'm telling you. Business P&L, bank statements, things like this. If you're showing great deposits consistently, oftentimes those can be used in lieu of taxes. When a request for a P&L is done, and that's often done if you're past the 6th, 7th month of the year, lender could ask, hey, I want to see this year's P&L. Most of the time, those don't have to be a certified copy of a P&L. So it's just the lender wants to see what's going on in your business, so you supply them with a P&L. Know that in going through and preparing for purchasing a loan and knowing, hey, you know, I've got to show income and I've got to pay the piper here. Just know that it's kind of the cost of doing business. But in utilizing 179 expenses and things like this, that you go through the process of keeping your income as high as you can, and doing it so that you can obtain that home loan. On the self-employed or the 25 plus commission borrowers, something important that I want you to understand on that, you are also taking business expenses, or presumably so, and in taking those expenses, you can minimize those write-offs and just pay a little bit more in the taxes. I know that hurts, but you know, you can do the same thing. As far as an example of a car salesman, you're a car salesman, and then you get training and you become a floor manager. And with that floor manager position, now you're making commission off anything you sell. You're making a little bit of commission off what other people sell. Perhaps you're getting a base salary on top of that. You can use that as a promotional increase in pay. I've helped some of my clients go through this to where what we did was substantiate that rather than blending more than 1 year of taxes to come up with an income, this person went through training so that they could do essentially a higher paid job. And because now they're doing this new job with this training, we're liking it to somebody that goes to college, right? They go to college, they spend 4 or 5 years there, and they get out, they have a diploma, they have transcripts that show that they went through the schooling. The next day they get a job doing what it was they were trained for. 30 days later, after they get some pay, 30 days later, I can help them get a home loan because they have a diploma and transcripts to show. So when somebody's essentially done the same thing just over a short period of time, they can get it too. That's the exception. That's the loophole. That's the trick, is to show I went through training. I've been trained to do this. Now this is my job. It's a step up. It's an increase in pay. I need you to use my income that I'm making now, not an average income from the last 2 years. And that's been something that I've presented to underwriters successfully and been able to put W-2 commission employees in a position to where they simply use that training to increase. And essentially, in going from a car salesman to a floor manager with higher pay, that pay is generally 40-50% more than what you were previously making. So that really helps commission borrowers that are in that position afford more house. So just know that if you're self-employed or you make the majority of your money from commission sales, know that there is a way to make it happen. You get the right person on your team, and you'd be amazed at all the things that can happen. So look for that guidance, look for that leadership, look for me. Self-employed borrowers, there you go. We'll see you in the next module.